Hello traders, my name is Tomasz Wiśniewski, I'm a Chief Analyst in Alpari Research and Analysis, and welcome to the daily analytical report with Alpari. So everything is more or less clear right now. We received a expected rate hike from Fed, and we also got hawkish dot plots. So actually, before yesterday, market was anticipating that we will get 2 interest rate rises in 2017, but from the latest dot plots, we can see that Fed is anticipating 3 hikes in 2017. So overall, it looks, traders received that as a hawkish statement. That is why American dollar is much stronger right now. Commodities are lower due to the stronger dollar, and stocks are mixed, but for example DAX is going lower. We also had an interest rate decision from Great Britain just now, where rates remained unchanged. It caused a decline on, it didn't affect cable much. Cable is now still affected by yesterday's decision, especially that we do have an acceleration right now in the middle of European session. Dollar is making new significant levels on many currency pairs. For example, on euro dollar, we are on the lowest level since January 2003, and we are aiming levels from December 2002. So it's pretty significant. As you can see, euro dollar here after FOMC decision, we went lower, but we still didn't break this horizontal support here. We aimed for that after FOMC decision and economic projections, and we broke that level today. At first it didn't look so strong. As you can see, we had a breakout, then a bounce, then another breakout, then a bounce, but this level 105.20 remained a resistance, and then the price went significantly lower. Stop losses were triggered, and as you can see, movement of 60 pips from that. From the resistance itself, we do have 110 pips movement. On the weekly chart, as you can see, lowest levels since January 2003, and we are aiming lows from December 2002. Not much to say really about this situation, because as long as we stay below 105.20, which is the closest resistance right now, the sentiment here is definitely bearish, definitely negative, so traders should look for short positions. We also, today we wrote an analysis for FX Empire that this breakout do not look very strong, and it creates an opportunity for a double bottom, but I also anticipated, it's not longer on the table, but I also said that as long as the price stays below this level, you shouldn't open long positions, and the sentiment remains bearish, and that's what's happening here. So you should always look for important supports and resistances, and keep in mind that even if something looks right, it doesn't have to happen as long as the price stays above or below important supports or resistance. Another, we are fully affected by the Fed's decision. On few of the instruments it helped the technical situation. In few of the instruments we got a reversal. What is an instrument that we got a reversal on is American dollar to Canadian dollar. Here the price, according to the technical analysis, in the long term should break the lower line of the flag. But reversal came because of the Fed, but also came on a potential support. Why this level was a support? And we highlighted that yesterday, if you remember. Why is that? Because we do have a lower line of the flag formation, which was a support here and here and here, and is now support again. Also look at that, we have three the same corrections in terms of length, 530 pips, this one is a bit smaller because it's 480, and this one is 500. So more or less the same corrections, so we have correction equality movement on the lower line of the flag and a bounce caused by hawkish dot plots. And now the price is advancing the closest resistance, which is 38.2 Fibonacci level. If we will be able to finish the day above this resistance, that will trigger short-term, mid-term buy signal. If the price will close below 38.2, that will be, well, the sell signal will be still on the table. But to be honest with you, with the sell order, I would wait until a breakout of the lower line of the flag. I would actually wait for a setup like that. Let me transfer this chart here. So actually I said yes that on some of the instruments yesterday's FOMC broke the technical pattern. On Australian dollar to American dollar, actually we had a help from fundamentals to the technical analysis. Why is that? You know this long-term, you know this downswing trend continuation pattern, which is the wedge. And actually wedge is supposed to finish with the trend continuation pattern, which should be a downswing. And a downswing was more or less a sure thing. Well, keeping in mind that there are no sure things on the market, but still there were here in this place there were higher odds for a bearish breakout here. Why is that? Because we had this wedge and the 38.2 Fibonacci level was defended. It was also a head and shoulder formation. So what we were just waiting for was the breakout of the 23.6, which remained support in the last week. But the price was advancing higher, and they broke 38.2 Fibonacci level and then went higher to the horizontal resistance created by those lows from October, lows from November, and after breakout we tested that level as a resistance. So the pressure allowed to break 38.2 Fibonacci level, and it started to be a little bit dangerous for the buyers, because if we would manage to close the daily candlestick above this green area, that would more or less deny the sell signal here, because then the wedge formation would be denied. But fundamentals came with a rescue. You can see a downswing that broke two very important supports. First support was the lower line of the wedge, as you can see here. The next support was 23.6 Fibonacci level. Here we had a breakout. As price action always says, broken support becomes resistance, broken resistance becomes a support. In this case we broke the support, and we broke the support, which became a resistance, and then we are testing this level as a closest resistance. We have a positive reaction on that, so a downswing, and the price is advancing lower. Actually, if you connect this low, this low, this low, it's not a surprise that we have a bounce here, but according to the technical analysis, what we should see here would be movement like that, but then finally a breakout of the support. Also nice technical movement on gold, where we continue this pattern of price trend continuation price patterns. As you can see, downswing flag, downswing flag, downswing flag, downswing flag, downswing pennant, and a downswing, and we are approaching this yellow level. Why this yellow level is relevant? Let me show you the weekly chart, because now everybody's wondering where is the bottom for this decline. Where? Let's connect recent higher lows since 2006, and we receive this long-term uptrend line. Let's also connect recent lower highs since 2013, and we get this nice red line, and they both cross here. Here, I mean $1,100 per ounce. So it's also a psychological barrier. So I would say this is the first aim of the downswing. The second aim should be $1,050 per ounce, whereas estimated cost of for the gold mining industry to dig gold. If the price of gold will go lower, they will just stop doing that and limit the output. Also, another occasion is euro to Canadian dollar. It's still actual. So a few days ago we stated that the price will go down straight away, or they will make a small bullish correction and they will go down. What happened is they picked the second option, so they are making a correction, but finally they are doing what they are supposed to do, so they are going down. Again, what is the potential target of this? It's the lower, is this blue line, which connects recent uptrend higher highs, and it's also around 61.8. So we're anticipating a downswing here, which is supported by almost every signal from the technical analysis. Euro to British pound is under the pressure. British pound is gaining a little bit right now, but as long as the price stays above this green area, the sentiment here on this pair is positive because the trend is positive. Right, so as long as the price stays above this level, we should buy. If the price will go below this level, we should sell. It's this simple, right? Don't look on the market for rocket science or something, or special magic tricks. Trading is this simple, and people just make it more difficult. I don't know why, they just tend to do that, which complicates their trading strategies. This is cable, and as you can see, movement after FOMC, movement after decision from Bank of England. As you can see, Bank of England interest rate decision remained the same. Now for today, we're just waiting for a CPI in the United States, and on Friday another central banks, Russian central bank interest rate decision, important for ruble, CPIs from Eurozone, and we will be able to call it a day, to call it a week, and wait for the next one with Bank of Japan. But coming back to charts, so here also Fed is helping the technical analysis. Why is that? Correction, trend continuation correction, which is shaped like a flag. We have a breakout of this short-term support, we have a breakout of this mid-term support, and we have a breakout attempt of this lower line of the flag. If we will be able to close this H4 candlestick below this lower line of the flag, that should trigger the sell signal here, which was put on hold since the middle of October. American dollar to Swiss franc, also aiming for those highs. By those I mean from highs from December 2015. It also can be a nice level for a retracement, but don't go for that because it would be just plain stupid. Why is that? Because you would go against the trend. You still don't have a reversal signals. What is more, you're going without a proper candlestick pattern, without a proper price pattern. So that would be just your assumption that if there is a potential resistance, the price should bounce from it. No, there is no such a thing that the price should do something or not. Also, silver dropped sharply as well. They just couldn't resist it. I'm sorry, they broke horizontal support. They broke this horizontal support. And where is the next one? The next one is here. The next instrument, which is put on hold right now because for the last 3 days you can see that nothing happens. We just have dodges. The price cannot find a direction here. If we will look on the closer time frame, as you can see, 50% Fibonacci seems like a strong support. Then after breakout, it is still a resistance. So we're locked between mid-term resistance and a long-term support. Breakout either way, so I wouldn't open position now because it's more or less even. Odds for an upswing and odds for a downswing are more or less even. So I would just wait for the breakout because once you will receive a breakout, the odds for one movement, one direction would increase. New Zealand dollar to Swiss franc, testing this horizontal support again. And again we have an upswing. There is a short-term selling opportunity, but I wouldn't go for that. There is a short-term resistance here as well, but I would trust more this long-term support here, not short-term levels, but long-term levels. So if we are still defending this orange area, it means that there is a potential for a further upswing on New Zealand dollar to Swiss franc. Euro to Australian dollar here. Well, here we do have a position on our live trading account. Luckily, because the price is advancing lower, and you know that yesterday we were telling about yesterday and 2 days ago, actually we are telling about that since Monday, that on Euro to Australian dollar we have a decent selling opportunity. Why is that? Again, maybe from this chart. Why is that? Because we do have a breakout of the uptrend line here. So actually from this point downtrend starts. The price is making lower highs and lower lows. And the price broke ultra important support on 1.44. Then after breakout we got a trend continuation pattern, which is a rectangle. And as we said, new trend is bearish. So we got a breakout of the support, and now the price is aiming long-term support on 138. And to this support we have 310 pips. Also, it's a good position in terms of carry trading, right? Because you're buying currency with higher interest rates and you're selling currency with lower interest rate. So we're having a short position here. We should be able to move the stop loss into break-even point. Also, this is a transaction with a potential good risk to reward ratio, because for example, if you enter now, well, stop loss should be like on 150 pips, but the potential movement is 300 pips, as we were telling. So 2 to 1, we have a slightly better risk to reward ratio, because we open somewhere here, so 100 pips to 350 pips, so much better risk to reward ratio, but you cannot blame us because we are playing open cards, and we are telling you about the situation since the beginning of the week, that there's a potential downswing here, and that's what's happening. Let's also see American dollar to Japanese yen. Yesterday we highlighted 4 potential supports. This one, which is this one is a horizontal support. This one was a trend line. This one was a correction equality movement. This one was a correction equality movement. Buyers used the first one. Obviously, the movement was driven by the FOMC. But they used the first horizontal support and they went significantly higher. So now we broke this gray area. What is the gray area? But first let me draw a trend line here. How important is the gray area? You can see from this long-term chart, it was a support since December 2014. Then January 2015. Then August 2015, then January 2016, and as you can see, we broke this level, so great success for buyers. And now, well, the sentiment is definitely positive for a long time here, but finally Bank of England and Mr. Abe and Mr. Kuroda, I think they can finally be happy with the level on American dollar to Japanese yen, because as you know, they don't like yen to be too strong. So I guess they welcome that. They welcome Donald Trump being elected as president because it started here. And since that, as you can see, beautiful downswing, 1,500 pips higher. Okay, let's change the account and let me show you WTI oil, where Fed helped to close the gap. Okay, we are aiming for closing the gap, but help from Fed, FOMC and hawkish dot plots came. Gap was closed, and now actually it doesn't look like a fast recovery here. It looks like we should continue this movement. That is why I highlighted this correction with a potential correction equality movement, but I think the price can aim a little bit lower. Let me just change the color. What we are having here is a horizontal support from here. It was a support, then after breakout it was a resistance, and you remember that we traded that, come back here to the resistance, then after breakout it was a support, and it can be tested as a support again. There's not a big difference between that level and that level. As you can see, it's 50 cents per barrel, so somewhere, maybe let's do it like that, somewhere here we could expect a bounce on oil. Okay, and as you can see, DAX to this is DAX, and as I said, reaction was a little bit mixed. Some of the indexes went lower, some of them went higher. Now DAX is trading higher today. Actually, that's what Deutsche Bank said that, and I also said that yesterday, that the possible scenario for the stocks with the hawkish hike, dovish hike, no decision, no hike, etc., that stocks, equities should go higher anyway. Did they go higher? Yes, they did. We got a new highs on DAX. And again, head and shoulder formation, but without a breakout of a neckline. Upswing, head and shoulder formation, but without a breakout of a neckline. That's why we were saying that don't go for it straight away, wait for a breakout of a neckline. you didn't get that, so you don't trade that. Actually, the price almost broke the neckline, but they were reversed on a horizontal support here, and now the price is advancing higher. As long, I would say that as long as the price stays above this level, the midterm sentiment is positive. Long-term sentiment is positive for sure. Short-term is positive as well. So actually, all good on stocks. As many analysts, and foremost Deutsche Bank, as I saw their report, they were projecting that will happen after we will get a decision from FOMC and from Fed. Let's come back to the Forex market. I would like to check how the euro dollar looks like. So as you can see, after making new 1.04 lows, we are having a small retracement of 30 pips, but definitely sentiment is negative. Here let's also look on euro to Australian dollar, where everything goes according to the plan. Okay guys, as you can see, many positions here went exactly as anticipated. So good for Alpari team, good for Alpari research and analysis. It shows that you can, I don't want to say trust us, but you should trust us, but you can easily watch our videos, and you can, I don't want to also say stay safe on the markets. But as you can see, our ideas that we post on our analysis on our Twitter account and our daily analytical report, our ideas works for hopefully your benefit. Okay, thank you very much for watching daily analytical report. Then now we are having half an hour break and then webinar about technical analysis. Remember to follow us on Twitter and alpari.news. Bye.